Hey guys, welcome back to episode 27 of US Stock Market Technical Analysis. In this video, I'll be sharing with you my technical analysis of the S&P 500, the Dow Jones and the Nasdaq. If you are new to this channel, my name is Linus, and in this channel I share all things related to the stock market, so both investing and trading. If you want more videos such as this, make sure you subscribe to my channel because each week I release new videos about investing, trading and the stock market. For this episode, we'll be doing something slightly different. So we'll first take a look at some of the fundamentals and macro factors that are affecting the stock market right now before taking a look at the price charts. So let's take a look at this article by CNBC. So in this article, there are three main things that we want to pay attention to. So the first is that the Federal Reserve Chairman, Jerome Powell, said that he expects policymakers in December to discuss accelerating the timetable for the tapering of monthly bond purchases. And in the next point, Jerome Powell said tapering could wrap up a few months sooner than anticipated. That will open the door to interest rate hikes thereafter. And for the last point, Jerome Powell also said that it's probably a good time to retire the word transitory to describe inflation. So there are three main points that we want to pay attention to. So the first main point is talking about the tapering of monthly bond purchases. In the previous time in 2018 where there was a tapering of monthly bond purchases, the stock market tanked after that. So how does the tapering of monthly bond purchases affect the stock market? Because you see, a lot of the liquidity that are driving up stock prices come from the liquidity from the Fed. But the Fed doesn't directly inject liquidity into the stock market. What the Fed does instead is that it provides liquidity to the economy, and a lot of this liquidity find themselves in the stock market after that. So with the cutting back and tapering of monthly bond purchases, this could reduce the liquidity coming into the stock market to continue driving prices up. For the second point, it mentions that after tapering wrap up, it could lead to an interest rate hikes after that. This likely means that interest rate hike also will be pushed forward. And when interest rates rise, this generally affects stock prices. So that's for the second point. For the third point, Jerome Powell finally mentioned that it's probably time to retire the word transitory when it comes to describing inflation in the economy. I mean, most of us in our everyday life would have already noticed inflation being around for quite a while already. But it is another thing when the Fed finally admit that the word transitory is no longer right to describe inflation. So these are the three main fundamental and macro factors that are affecting the stock market right now. So if we go back to our charts over here, let's take a look at the chart for the S&P 500 first. If we take a look at the price chart for the S&P 500, I did my previous video sharing my November analysis back when it was around at this point over here. So it was either the 1st or the 2nd of November. And you can see that fast forward 1 month, the stock market is back to where it originally started in November. The stock market did indeed went up in the first half of November, but towards the tail end of November, you can see that the stock market has just been declining. So from the peak over here to where we are currently at right now, the S&P 500 has declined by about 3.8%. So it's not substantial yet, but it's still causing some signs of worry among investors. And the reason is because this decline coincides with the three main fundamental and macro factors that I just mentioned just now about the tapering of bond purchases, interest rates, and the Fed admitting that inflation is no longer transitory in nature. Furthermore, right now we also have a new variant of the virus. So that's another thing playing on most investors' mind. So if we take a look at this decline over here and zoom in, we see that on this day's candlestick and on this day candlestick over here, volume was above average, right? So this was the first day decline volume and this was the second day's decline volume. So there's indeed some selling volume on this decline. Moving forward, if prices of the S&P 500 continue to decline, which are the support levels that I'll be taking a look at? So the first support level that I'll be taking a look at is this 50-day moving average. So if we zoom out over here and see, prices of the S&P 500 has generally respected the 50-day moving average, right? So you see that when prices reach this 50-day moving average, it finds support and it bounces back up. Similar for over here, here, and so on. But during September and October, prices break below the 50-day moving average. But it managed to go above the 50-day moving average once again. And that is why right now I'll be taking a look at the 50-day moving average as the first support for the S&P 500. The next support level that I'll be taking a look at for the S&P 500 if prices continue to fall is this green box over here. So a price level of around 447 to this price level of around 443. So this price area has acted as a resistance for the S&P 500 just recently. So we can see over here, prices encountering some resistance over here and some resistance over here. And now that prices broke above that resistance might turn into a support level for prices. So that's the second level of support that I'll be taking a look for the S&P 500 if it continues to fall. If prices manage to find support at one of these two levels and rally back up, the first resistance that I'll be taking a look at for prices is this price level of around $470. So you can see that prices encountered some resistance over here and some resistance over here. So if prices move back up from here, that's the first sign of resistance that I'll be taking a look at for. So that's my technical analysis for the S&P 500. Now let's take a look at the Dow Jones. The Dow Jones, similar to the S&P 500, has declined recently. But if we compare the magnitude of the decline, the Dow Jones declined more than the S&P 500. So if we take our two over here, we measure from the peak to where we are currently at right now, the Dow Jones declined by about 5.72%. As we have seen just now for the S&P 500, the S&P 500 from its peak to where it's currently at, it only declined by about 4%. So the Dow Jones experienced a greater percentage decline compared to the S&P 500. And this is also confirmed by the relative strength line over here. So this relative strength line compares the individual stock, or in this case the individual index, against the S&P 500. So since back in June, this line has been on a decline. So this tells us that the Dow Jones has been underperforming the S&P 500 since June. And even though the Dow Jones has underperformed the S&P 500 over here, right now the Dow Jones looks like it is an area of strong support. So at this point over here, the Dow Jones is likely to experience two forms of support. So the first support is this green box over here. So this price level of around 348 to this price level of around 345. So if we zoom out a bit over here, you can see that this is a key price range. So prices of the Dow Jones has experienced some resistance here before. So over here, and over here. And since right now the prices of the Dow Jones is above this price level is likely to act as a support for the Dow Jones. The next form of support is in the form of the 200-day moving average. So as of the filming of this video, I believe right now at this point over here, the Dow Jones is likely to experience strong support, which means that there's a higher probability that the Dow Jones is likely to rally back up rather than fall. But if it falls below this price area over here, then the next level of support that I'll be taking a look at is this price level of around $335. So those are some of the price levels to pay attention to for the Dow Jones for the month of December. Now let's take a look at the Nasdaq. As you can see on the price chart, the Nasdaq has performed relatively better than the S&P 500 and the Dow Jones. So even as the S&P 500 and Dow Jones have declined recently, you see that the Nasdaq has held up relatively well at this period of time. And that is why if you see the bigger tech companies, those companies have performed relatively better than the overall market. Yes, some of them might also have declined, but their decline has been relatively lesser compared to the other companies and stocks in the US stock market. And this is reflected by the outperformance of the Nasdaq against the S&P 500 and the Dow Jones. So moving forward, if the Nasdaq can hold at this price area over here, then I want to see prices of the Nasdaq breaking above this price level of around $400. As you can see, this round number of $400 is proving to be a bit of a resistance for the Nasdaq. So if prices of the Nasdaq is to continue moving up moving forward, then I want to see the Nasdaq breaking above this price level of $400. If the Nasdaq can't hold at this price level, then the first level of support I'll be taking a look at is this price level of around 390. This is a minor support level, right? So you can see prices finding support at this candlestick over here and over here. So if prices decline, then this will be the first level of support that I'll be taking a look at for the Nasdaq. The next level of support that I'll be taking a look for the Nasdaq is at this point over here. So at this point over here, it corresponds both to a support level and the 50-day moving average. So if prices do decline to this price level is likely to provide a strong support for the Nasdaq. So that's my US stock market technical analysis. If you have enjoyed and learned something from this video, smash the like button because it will really help the channel grow and allow me to produce more content such as this. And if you want more weekly stock ideas and tips, you can join my Facebook and Telegram groups. I included the links down in the description below. I'll see you in the other videos to your financial success.